Hello everyone. So our focus today is going to be on reversal pattern technical analysis. Okay, so sit back and listen throughout the tutorial, and by the end of the video you'll be able to tell when to take a trade after seeing the structural formation that indicates a reversal pattern. So what is a reversal pattern? In terms of technical analysis, a reversal pattern is a structural formation on your forex charts that indicates a switch in trend. The idea is a switch in trend is because the market has been trending for a while in a particular direction. So how can you tell that the market has changed direction, right? So the only way you can tell that the direction of the market has changed in the opposite direction is when you see the structural formation that indicates a reversal pattern, and you're going to see this structure is broken through your things you're looking out for is your neckline breakout. That's when you can place a trade. So let's just go over the things we'll talk about. So number one, we will talk about the three types of reversal patterns. So there are basically three types of reversal patterns. So you don't stress yourself out looking for too many structures. You just need these structures to confirm that it's a reversal pattern. The second one is what qualifies a reversal pattern, because a lot of the time, traders look at the pattern and they say, oh, it's forming, a reversal pattern is being formed, and they are impatient. They are impatient to wait for for the structure to be confirmed before they place a trade. If people place a trade and you see that price, the market goes in this direction with this money. So we'll talk about what qualifies a reversal pattern. 3. How to confirm a reversal pattern is probably basically the same thing, but I put it there anyway. Number 4 is the best time frame for a reversal pattern. So let us go. So quickly, I'm going to just show you some formations that I talked about earlier, the three types of reversal patterns, and I'll be fast on this one so that we can go quickly into the live chart and you begin to see examples of what I'm talking about. So what you want to see in a reversal pattern is you want to see the market trend for a long time, over a long period of time. Then when it gets to a level, you begin to see market consolidations, and then shorter candles, you begin to see that the market is not able to make higher highs. That's where you start looking at the pattern. So, but however, you have to wait for your pattern to be complete. The structure has to be broken on the opposite direction before you can see this reversal pattern has been formed. So, for example, we're going to start with let's start with the double top. So let's imagine that the market has been on the move. Let's imagine this a daily chart or a 4-hour chart. Okay, then it gets to a level and you see a strong bearish move, and it tries to rally up again, and you see that the next time is unable to break the previous high, which is at this level. Okay, then you see what will happen here. The market starts to go in this direction. At this time, this level right here becomes your neckline, and the moment price breaks through this level and gives a little pullback back to the neckline, there you go. Your double top is complete. It has been confirmed that there's been a switch in trend, and this is where market starts moving, making lower low, lower high, until it gets to a certain level and gives a different formation. This is for a double top, right? So let us quickly go to how a triple top will look like. So same thing. I mean, if it's going on a bearish move, you're going to find a double bottom. It's just what happens all the time, right? And there are times where you do not even get a retest. The market breaks through that level and just keeps pushing up Okay, so for a triple, for a triple top, it's gonna be just same thing, triple, and right here will be your neckline. Sorry for that. Right here will be your neckline. Oops, again, sorry about that. This load. Okay, so this is going to be your first top. This will be your second top, and this will be the third top. As you can see that the market could not break the previous high. This level market could not break the previous high, and there you go. Market breaks through the support level. Sometimes it hits, sometimes it doesn't. Then you go for the sell, and that's that for the triple bottom as well for bearish move. Then for head and shoulder, you're going to be having where you have the middle structure will be higher than the structure on the left. Right? Look at it as a person. There's a head and there's a shoulder. Okay, so same movement. You're going to have a movement like this. Tries to break. Second time breaks the higher high. Comes down again. And the third time, it wouldn't be able to break the previous shoulder. Right here. Giving you your support level. Right here. So when price breaks through the zone, there you go, you have your triple, your head and shoulder. And for a bearish market, what you're going to be having inverse head and shoulder, which is going to be in this formation as well. And there are times where you are going to experience, it's not always perfect. Instead of having a double top, right? Instead, you're going to have something like this. It's going to be, a bit slanted. Sorry about that. It's going to be, a bit slanted this way. Same thing for, your triple top and triple. So, but either way, let us quickly go into the chart so that you begin to find examples of what I'm talking about. So I've mapped out some. Sorry about that. Some areas. Okay. This is yes, you can in this chart here you can see what I'll be talking about. From here, from this swing low right here, you can see that the market has been on an uptrend for a very long time. You can see the movement, right? So when you go to this zone, you can begin to see the market consolidation right here. This whole place was, market was moving in a sideways direction, giving you signs of a possible market switch in trend. Okay, so while this whole formation was forming, this is where you start seeing, peaks and highs and lows, like peaks and tops. So at this point, you will now find this area here is going to be your support area. It's going to give you support areas where you can begin to start mapping out areas, potential areas where when price breaks through those zones, you will now look at for yourself. So at this point, you can find your taps. This is one. You can see another one, and you can count this zone as 3. And when price broke through this level, let's see what happened. The switching trend right away, and you can see how far this market went. So guys, this is, and we can begin to see it throughout the chart, and you can find this is a double. You can find a double top right here. You can see that after a long market trend. So guys, the market must have trended for a long time before you can say, okay, it's possible that, I'll be looking at for a reversal pattern. That's why it's called a reversal pattern, because it's reversing, right? So I want us to go look at other charts. Okay. areas. Okay, let's see this. Okay, on the daily chart, yes, this can count for double top. This can count for double top. Check your 4 hours. You're going to see price movement. See the price movement as between a strong rally upward direction long term. So that's that. Then we can go see more on other charts. Okay, there's one here. You can see, whoa, you can see a long market movement right here. After a long trend, what happened here was price gave a high here, gave a higher high here, and the third time it couldn't break through the previous high. It stopped right about the previous shoulder. It now gave a head at the shoulder, and the neckline is going to be at this level. And you can see how price broke through this level and gave the same fall right here for a long time. But this it counts. Then we can see more other charts right here. Wow, this is a perfect one. This is for gold. You can see the triple taps here. This is a triple bottom disregard. So let me change it to line chart. You can see it's pretty obvious. This is the zone. You can see that the market has been on a bearish move for a long time. So the question is, where is going to be your neckline? You look at the next available resistance. So the neckline is going to be on this zone right here. This is your neckline. So when we switch this back to our candlesticks, you're going to see that there was a huge candle. You can find a big candle right here that broke through this zone. And there was a minor pullback before the market moved that direction. Ever since, the market has continued to be on the bullish move. So you can see why I say this is a switch in trend. Guys, I hope you're getting what I'm saying. Right here, there was a reversal. Sorry, there was a retracement on the downside, and right here you can find a double bottom. And this double bottom, you can find it here on the line chart. You can see it's clear. Okay, so this is in the daily chart. So for you to be sure of a reversal pattern, sometimes you have to switch to the lower time frame. So we're going to switch on the lower time frame for this particular pair to see. Okay, so this is just to enable you find a neckline where you can place, where you can map your tools, your trend line, your horizontal line for market entry. But I hope you're getting this. So your neckline is going to be around, I think, this level, or it's going to it can be on this level as well. Breaking it, justify. So guys, I hope you're understanding how to do analysis with reversal patterns. Let's see. Okay, here's one again. This is your card JPY. Sometimes for you to find a pattern, not every time, you have to switch between your candlesticks and your line chart. So right here, you might not be able to find your chart pattern so easily. So this is why I switched to my line chart. I cannot tell this is an inverse head and shoulder. This right here is the head. Let me put it in text. This is the head. This is the head. And this is the shoulders. I'm going to call the shoulders S. This is the first shoulder. Shoulder 1. And right here is going to be the second shoulder. I'm going to name this shoulder 2. Okay. And this level right here is going to be the neckline. So when price breaks through the zone, you have a good, that is when your reversal pattern is confirmed. You know, there are traders who take more risks and they want to place their trade on the formation of the second shoulder. However, if you want to do that, know that you're being aggressive on your entry. You make more money, but you're exposed to higher risk. So, to be conservative, you want to wait for price to break through the neckline before you place a trade. Okay, so that is that. So guys, I hope this short tutorial was really helpful. If you go through your chart, you just keep finding necklines and chart patterns, reversal chart patterns. So just to end this tutorial, you know, when it comes to reversal patterns, there are really no best time frame. You know, like this is the best time frame. You have to understand the totality of the markets to make decision. However, I will recommend that when looking out for chart reversal patterns, you do not go beyond, you do not go lower than 1 hour. And even if you want to look for chart patterns on 15 minutes, you must first of all confirm, you know, a market trend on the higher time frame. Then on the lower time frame, you know, on the retracement, which on the lower time frame is going to be a trend. Then you can now look at the patterns to join market contribution. So guys, this is how to do chart pattern or reversal chart pattern analysis. So I hope this was helpful. Leave comments in the section below. So if you do not understand, I wouldn't mind to create another video just for you to give you proper understanding of reversal chart patterns. So I'll see you in the next video.